So as I'm always open about my business, I get a lot of questions about taxes and accounting and how we're set up. So I figured I'd do this video so I can quickly respond to those questions with how we're set up and how we're structured as of May of 2018, which I don't forget what day it is. Doesn't matter. May of 2018, and we've been this way. Actually, now this is our 15th year in business, and this is the 15th year that we have still been an S-Corp. Now, I'm not going to get into an entire debate about the finer points of this because I'm just not that knowledgeable about it. I hired a good accountant. So my first advice to you, hire a good accountant, find someone you trust, find someone who's really passionate about accounting, understands the laws. And this is specifically a business accountant, not just a tax preparer. There is a difference. So you want a proper business accountant who has experience with business. And it's the same as the guy who's fixing your computer comparison versus the corporate enterprise development company. Very different. So just how there's differences in systems for the people who just do computer repair and the people who understand servers, networking, and enterprise level stuff. There's different levels of accountants, and taxes are complicated. Taxes are confusing, and anyone who has a systems background and is used to very process-oriented things will probably find yourself infuriated if you actually spend a lot of time reading the tax code. It's like legacy systems stacked on top of each other with a lot of weird stuff in between. So I'll give you the short of it, though. We are an S-Corp. Now, it's important to have a separate corp, and it's important to have a separate setup. And the reason why is you don't want your money flowing through from your personal and then have to separate it all out. I've known people personally have gotten in trouble for this. I've even seen other YouTubers who've talked about how they got themselves in trouble because they got big on YouTube and they never separated personal versus business. And now they have a tax mess on their hands to sort it all out of what was a business expense, what was a personal expense. Having everything as a separate entity with separate bank accounts is the first clear separation, so there's never any confusion about that. And the last thing you ever want is to have a confused IRS agent at your door. They will sort out confusion, and it usually is going to cost you a lot of money. And having an attorney represent you also costs a lot of money. Nobody wins. Well, the IRS is going to win, and you're going to lose a lot of money. So make sure you set things up properly. Brief advantages of S corporations: limited liability for management and shareholders. I own this company, so I am considered a shareholder. Unlimited number of management, no state residency requirements. So these are just some structural things of how you can set this up and how you refer to us as officers of the company, as entitled officers, whether you have a chief financial officer or that. And even when I was starting out small, because I was essentially we're a consultancy business, and when you look at it from in terms of structure of the company or how IT works, people ask us to do stuff. Well, there's not always a lot of hardware involved. Most of our money comes from typing on keyboards and setting up firewalls and things like that. Especially a lot of times we're just configuring customer provided equipment for deals they got with the stuff. So the equipment doesn't even always pass through us. We're just doing the labor portion of it. That being said, S-Corp offered some advantages in terms of the way that is taxed. And this is just one of those little nuances, and it may not be the same for you. And it may be, especially if you're outside the U.S., there's other entities you need to explore. But that's why I start with get a good accountant, and you can start to understand these things. So a few of the things that we do are our S-Corp owns vehicles. Our S-Corp owns lots of assets that depreciate, which are good things to have in terms of S-Corp because you can write those things off. It's not good if you are trying to use it for investments and appreciating assets, at least according to this article. Once again, that's as much as I'm going to say about it is go find a good accountant, read a lot of this stuff so at least you're on the same terminology page as them, and then have them a decision once you understand your business model of how you want to do things, and then make a go of it from there. All right, so we're going to get off this topic, but I wanted to let you know I am an S-Corp. These are some of the reasons, because I've said this before, and immediately someone says, why not? Why didn't you switch to an LLC? Because that's what I want to do. I'm really not the most qualified person to ask. Based on the conversation I had with my accountant, S-Corp was what works for me, and it's been working for me for 15 years. We are profitable, and things are working. Now, here's what I really wanted to cover today. Was the question comes up a lot about how we do our accounting if we're not using QuickBooks or you're using some open source product and does it work and blah, blah, blah. Yes, it actually works quite well. We've been using a couple tools for a while. So specific tool that I'm talking about here is a software called KMymoney. It's a stupid name. It is available. This is version 5.00. It's been around for a while. You can get this at KMymoney.org. It's free. It's under GNU Public License. And it's available in Windows. So you can use this in Windows or Linux. It actually works really, really well for managing ledgers. Now, we do not do any invoicing from this. We only use it to manage our ledgers. And let's describe a little bit of that. And I know some of this is blurred out, but we'll cover kind of what the ledger is and how we do the accounting each month and how we lost $8,000 in April of 2018. So I've done a whole tutorial on the functional ways that this program works. So you can grab QIFs from your bank account. QIF, I think it's Quicken Interchange Format or something. It's a downloadable format that most of your banks support, but this also supports CSV. So however you're getting your accounting data, we do all of our accounting data in real time off of what they would kind of call as a cash basis, but it's not actual cash money. It's just the term they use. There's cash accounting and accrual accounting. For this talk and what I'm talking about this part here, we do cash accounting. The shortest way to explain it is cash accounting is when you recognize the revenue when it came into you. So I billed you $100, you paid me $100. I recognize that $100 when I was paid, not when I sent the bill. Accrual accounting is I have $100 because I sent you a bill for $100. Well, you don't actually have it until the bill's paid. So this is just something to think about of how you do the accounting. And when you get to be at the larger scale of accounting, you almost have to go accrual accounting. And I'm not going to get to the finer details of that, but those are the two terms you may want to read so you understand a little bit how that works. Do some Googling. There's plenty of information out there about it. And talk to your accountant about the final decision, how you set things up. Once again, deferring to the accountant because I'm not. So let's go over income expenses. So when we look at our income, of how we got the money in. So once we sort all these things out into categories, this software is smart. It remembers previous categories for things. For example, cell phone payments are made to the same company every month. The building lease goes to the same person every month. Electric and gas goes to the same place every month. Insurance goes to the same place every month. So it actually auto-categorizes lots of things. QuickBooks does this very well too. I'm not a QuickBooks user, but you can do this in QuickBooks. That being said, what your P&L is each month is all the money in, all the money out, and then summarized. So we'll run it from the top on down. And like I said, the numbers aren't actually all that relevant. Maybe you're curious about how much I make, so they're relevant in that aspect, but they're not relevant in terms of this talk here. This is just to kind of show you the structure of how we do it and how we do it in this piece of software to understand our position. Now, my accrual position, I could say, if I looked at Invoice Ninja right now, is people owe me X dollars. This is about what dollars I have in the bank and what my cash position change was. So here's all the different income categories we have. I have the generic deposits versus express checkout payment versus interest versus PayPal here. These categories, and this one's going away. This was credit card. We just got rid of our credit card company last month, but these are the final deposits they gave us. We moved actually over to PayPal here, which is their in-store system that we're using. We're actually saving money. As much as people say that the credit card companies are such a pain in the butt because you have all these what I call creeping little fees that they add on there. Like, oh, our rate's only this. We only get 2% on rate, and PayPal's 2.9%. And I'm like, yeah, but by the time I have all these little fees that you added on top, I was paying effectively 4.5%. You argue with them, and this happened before, they reduce the bill. And then they finally add these little fees and stuff like that, and they're kind of a shady business as far as I'm concerned. PayPal is always very upfront. We charge this rate. Now, I know I can save money if I use some of these other larger credit card processors, but the reason we don't bother is because it's actually like a very small amount of money because this is for our in-store charges. Our in-store charges are very small. We just don't do that much retail anymore. Nature of retail's kind of faded away in this area quite a bit. Most of the retail stores that had computers around here closed. There's not as many people with general computer stuff, and the margin for selling computers directly is really, really small, so we got out of that altogether. So then the deposits are all the checks written to us that come in from everywhere or ACHs and generally how clients pay. And this also, a subcategory of this, but I don't break it out separately because there's not really a need to, is income I receive from Google for ad revenue we get from the YouTube channel here. Express checkout payment, that's the PayPal name for money coming in that is from online bill pay. So that's another payment source that we have. This is just, when we do out-of-state work or remote work and people use our online payment system, that works very well, and we separate that out. Interest is interest earned on money that sits in some of the other bank accounts, because if you have a pile of money, put it in somewhere that earns interest or earns some type of return on investment rather than just leave it in your checking account. So we have to account for that money that comes in there. And there's payable here. So these are the summaries of the total income that comes into the company. And like I said, this is all built off those QIF files and the bank statements import. So we import from our local bank and we import from our PayPal bank and shuffle up all the incomes. Now, here comes all the expenses. This is all the expenses that go out each month. First one is that you see here is shareholder loan payment. And you may have heard me say that I own the company. I do. And a shareholder loan payment is because I'm the shareholder and you may loan. This is part of the reason it's important to have your personal versus your business separated, is you may loan your company money and then you can then set an interest rate and be the person who loaned the money. Now, taking loans, this is a very small amount of money that goes back and forth, even though I know it's blurred, but you can give your company money and then pull the money back out based on an interest rate that you set and an agreement that you actually have to sign with yourself, essentially. I won't get into the finer details of it. Make sure you have a good accountant who can structure all this properly for you. But this is one of the ways that you loan the company money, and then you may want the company to pay you back that money they owed you. Sometimes they call it a promissory note. I have a category called shareholder loan payment, so it pays me back money I loaned it from long ago in very small amounts. So that can also be loan payments you got from banks and things like that. I'm a better person to loan money to my company than I think a bank. So just throwing it out there. Then you have all those little fees that get attached to everything. Bank fees, credit card fees. PayPal attaches a fee for transactional fees and percentages. And my accountant isn't free. So there's an accounting cost that go in there to my business. And that's the category for those. So I understand where all my fees are. Advertising fees are what they are. When we buy ads on Facebook or wherever we buy ads from, Google, those are all advertising fees. I've wondered if hot sauce should go under there, but I'm not sure yet. Building expenses, things that the building needs. We do lease the building, but we still are responsible for it based on our lease for things we need. If something, need this, need that, we bought a lot of stuff. There was a whole lot of this building expense when we built out this new location, but those are where those categories go. Building lease. That's a fixed amount. Every month we write the landlord a check. So that's where that goes. Cell phones that the company owns. That's where that payment is. Now, this is where the variable costs are. And now I didn't break these out, but sometimes you'll see P&Ls broke out to variable costs and then your fixed costs. So you have your operating costs and then you have your direct job costs is how I refer to them. I break them out a little bit. We do job costing on a job-by-job basis to make sure we're profitable. This is like the overall cash position of the company and how we look at it each month. So direct job costs are parts that went out, and I generically called it computer parts because I've never changed the name of the ledger, but it's really anything. It's network equipment. It's anything that was needed for that job or jobs in general go in the computer parts. Contractors. We use contractors from time to time. So whether we use a subcontractor for some little aspect of something we don't do, that could even include things like we built a website. They needed some special copy written from someone. So we hired someone to write that copy. That is a contractor used to write copy on a job. So it's a direct job cost. It's going to be part of my variable cost. So we sum those up so we kind of understand where things are for the jobs that are going. And they kind of relate to, you can break them out in percentages. This is for when you're doing some big picture thinking about where your position of the company is. You look at your total income and your direct job costs, and you try to figure out, okay, this is how much percentage I'm making on this, and then you look at your operating expenses. But in terms of that, I'm going to jump all the way down to payroll. You also have to figure out how much you spend on employees, which also kind of go into that direct job cost depending on the category of the employee. And then it gets even finer detail of, is that an administrative employee who does administrative things in your office, or is it an employee who directly works on client stuff? So then you can see how this can be really fine detailed when you need it to be. For the most part, I don't need it to be, other than when we're doing projections and really thinking about things in the big picture of where the company's going and overall profitability of it. You may have noticed that there is food and entertainment and food for clients. One is expensable at one rate, one's expensable at the other rate. I don't know what those rates are. My accountant does, so I break them out into categories because ultimately this and the transactions related to it get handed to the accountant so they understand what category things go in. Electric and gas, those are valid expenses. It's got to pay to keep the lights on. Insurance, that's an important thing. Please have liability insurance on your company. That's important. But there's also things like, because the company owns vehicles, it pays for the insurance on those vehicles. So that all gets lumped into that category. Office supplies, well, we don't buy a lot of those, but when you do, they go in that category, paper, things like that. Payroll is going to be, at least in a service-based company, your biggest expense, because the biggest asset you have in a company is really good staff. But to have a good asset, they're not cheap. And I'm fine with that. So that's part of the payroll is, all the people I pay that do the stuff. So that's going to be percentage-wise. That always is one of the biggest expenses you have, because mostly what we do, people call in, they need a problem fixed. I have people on staff that fix those problems. Most of my money is not spent on the software that we use. So people, get real fine and, I know about this or that. And we start breaking out the annual costs of things like the software we use, much smaller number than the payroll it takes for paying people to sit in front of computers to use all that software I bought. That's where when you grow your business and you have a bunch of people, that is always where your expenses come in. Smart people are expensive. That's just part of it, and a big thing that goes on. I break out taxes, but taxes are kind of a result of payroll, just so you know. So based on the effective tax rates, if you pay someone $80,000, $90,000 a year, you don't directly pay them $80,000, $90,000 a year. You pay them whatever that is less the taxes. And then a separate category is you write the taxes somewhere else. So it's not like I give them the money and then they pay the taxes. That's what a contractor does, though. When you're doing payroll, you end up writing two checks. You write the check for the amount of the payroll less whatever the taxes are. By the way, I use my accountant to do all the payroll. And that's important, because the accounting payroll there's a lot of nuances to taxes that I don't understand, that I don't want to waste my time trying to understand. I have an accountant that does understand that when I give people this much money, this much taxes are owed based on the law changes. And when the law changed again here in 2018, it actually affected what the payroll checks were very slightly based on the new tax laws. You need someone keeping up with that, or you need software that does some payroll software, or payroll companies will do that for you. My accountant is full service. They do my accounting and they do my payroll. They actually write all the checks for my staff. And the nice thing is the accountant lives down the street. So in passing, they just drop the checks off here. Really convenient. They actually write them for me and have them all filled out. By the way, my accountant also writes my tax checks for me. So the taxes that go out, they have authorization to write these checks with my signature, and they just send me copies of them, and makes it really easy to do the accounting. Then we have travel expenses, which, the general travel expenses for parking and things like that, those go into a category. So my staff does not, if they go out to Detroit with one of our company vehicles, they park it somewhere, they also get to expense that back to the company, and it's a valid write-off. Then you have web hosting, iNet, which is my generic catch-all for things like SolarWinds that we pay and other software expenses, Comcast cable, and all those things that functionally take to keep the business running. And like I said, it doesn't cost much as payroll. Now, when you sum all this up, this is how we understand our cash position at the end of each month. Now, the way it worked out, we took in quite a bit of money, and we put out a little bit more money than we took in because of that big project. Some of you that follow the channel seen the video on there. So we got a deposit for that. We did not get all of the payment. It is a very large sum of money that we have invoiced to them that is not paid yet. Some of it actually is paid because it's May and this is April. So a bunch of money landed in the account the other day. But as of April, we actually lost $8,000. So, and we didn't lose it per se. We know exactly where it went because we're doing our accounting here. But these are the things you have to think about in business. Now, you can have a business line of credit, or you can keep some cash in a bank. For us, we keep cash in a bank. So doing a loss at the end of a single month of $8,000 means our cash position changed to $8,000 less than it was the previous month. So when your cash position changes, that just means there's that much less in the bank account. That does not mean we went negative. That just means there's that much less from what there was. So this is how you track that information. This is an important aspect of accounting, is make sure you track that from month to month and see where it is. So previous months, we'd actually made money and put a positive cash position. Then other times it's a negative. Now, that is the ability that you need to have in your company. Like I said, you can do this with a line of credit or by keeping cash in a bank, so you can control the float for when clients pay you, or on the wonderful chance that and I'm saying that ironically, of course, or with air quotes, wonderful times when clients go, I just don't have that $10,000 for that invoice. I said I'd pay it on the 15th. I'm going to pay it on the next 15th. So at any given time, people owe us a certain amount of money, and occasionally things happen. You have to be very much on it. We're very much on the collection side of things all the time. Well, I'm not, Marvin is. And we're making sure that all the money coming in and being billed is being collected. But these are just those things that come up in business, and this also changes your cash position because you thought you were getting paid and you didn't. This is also why we work everything on a cash basis in terms of instead of accrual basis, because if I look at from accrual basis and I invoiced out all these jobs, that number's way the other way. But actually, there is indeed the end of April less money in the bank account than there was at the beginning of April because we had a cash position move of less because of the money went out. And of course, that's what's really important because you got to know where your cash position at all the time to make sure if someone says, hey, can you do this on our project? You got to buy parts. I know I got to make payroll. I can look at the bank account. I can understand my cash position to move over to that. So these are the things you think about. And a few people have asked me, how long does it take me to do this accounting and how do I do it in terms of when I use KMymoney for all the transactions, all the bank accounts, all these fees that add up to all these transactions here. I spend 2 hours a month on it. That's it. It really doesn't take much. So once a month, I do this profit and loss or income and expense, look at the total income coming company, and sum it up. Now, the fun thing is I love statistics and data. I've been using this software for years. I think since 2011 or 12. So that gives me 7-8 years of data in here to look at trends, look at month to month, what months overall over the last 5 years did we see more money in. And that's kind of fun part about this. Once you get all this in a system, you then can play with the data to look at it in different ways to make predictions or make understandings of things. So this it's just an overview for people who always ask me, how do you do the accounting? How do you know you lost money? What does it mean you lost money? Are you going out of business? Or what does it mean you made money? And this is that tool by which I do it. And because I do this monthly, the year-end one is actually really simple. Once I do December's, I just summarize the year, change the date range. It's already done for the year. So my end-of-year accounting becomes very, very simple because I do it once a month every month to make sure everything matches. Then once I do December, done. I have my year end. I know the overall position of the company. Did we make money? Did we lose money? Where are we at with things? And like I said, this is important. It's important to understand. And from a business owner's perspective, you want to know where your money is at. You want to know where it's going. You want to make sure you have money in a bank so you can keep making payroll, but also predict those trends. If you start losing month to month to month, you better think about what you're doing. Do you have too many expenses? Are your contractor expenses too high? And this is where, and I'm not going to lay it all out because I got to blur out more stuff at it, that you can look at your money over time and see where your money's coming from and see what the trends are for it. Real side note too is people may want to know like how much money I make and things like that. I'm not going to disclose exactly how much money I make, but I will disclose how you have to pay yourself. Once you have an S-Corp, it is important that once again, the bank, this company is not a piggy bank for you. You just pull money in and out randomly. I do get a payroll. So all money that comes into this company and all money that goes out of this company is documented. We use nothing but credit cards to pay things for the company. This means we don't have to keep all these receipts laying everywhere. Receipts just go in a box, or most of them are digital now, go into an email thing called receipts. I got a folder for it. I just dump everything in there, but I don't have to look at receipts and key all this stuff in. I use a credit card for each one, for PayPal and for that. So that lists the name of the place I went. And then that's how these categories get here. I'm not having people submit a bunch of personal expense reports. I even give the staff company cards to pay for things, so everything gets documented. The same thing with all monies out. You can't just go make a withdrawal because the IRS will go, where'd you do with that money? So all the money coming out gets documented with checks or gets documented on a payroll sheet. So all monies in and out is accounted for, which is very important because if you want to have trouble with the IRS, have a bunch of unaccounted for money that came in that you don't know where it went and money that went out that you're like, I just needed some. That will get you in trouble. I've had friends that have had so much trouble with this stuff. Just don't. Just do everything in a very documented way. Use credit cards for everything. Don't pull a bunch of cash out of the bank and distribute it. You will just find yourself in all kinds of trouble and probably owing a bunch of money in taxes because you couldn't properly account for a legitimate expense because you decided to use cash. And that also raises red flags of just seeming suspicious, at least here in America. I don't know how it works elsewhere, but document everything. So that's my quick overview of accounting and what we do here. Just and answer the question a lot of times of, well, how do you handle the accounting? Thank you for watching. If you like this video, go ahead and give us a thumbs up. If you have some feedback, leave it in the comments below. If you'd like to subscribe to our channel, hit that subscribe button, hit the bell icon to let YouTube know you'd like to know about new releases on videos. You can also find new releases on our website, lawrencesystems.com/blog, where every video automatically gets posted, so you can always find our videos, whether YouTube notified you or not. Also, if you'd like to hire us for consulting services, go ahead and hit lawrencesystems.com, fill out the contact form, tell us about the project you would like us to help you with. We work with a lot of businesses, we work with a lot of other IT people who need services done. Also, if you want to help the channel out in other ways, we have a Patreon. We have right below me a Amazon store where you can check out some of the products we've reviewed, and as many of them as available on Amazon. You can also check out the things we love, and that's an ever-evolving list of discount codes, offer codes, and different software and affiliates. You can find that on our website as well, or just follow it in the link below right to the things we love landing page, including the hot sauces we recommend, which is always changing. All right, once again, thank you for watching, and see you in the next video.